Well, good weekend, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is the weekend edition, and it is Sunday. It's about 4:10 p.m. Central Time, about 50 minutes before the markets open, about an hour and 20 minutes from the Super Bowl, and I'll be going out with friends at a local place watching the game for a while. So I wanted to get this out before I normally do. As you know, I often like to wait until the markets open in the evening, but I'm not going to be around tonight. So Iran has told the U.S. in no uncertain terms that the U.S. isn't acting in good faith. They have an armada basically threatening them, and the U.S. should remove that so that they know that they're negotiating in good faith. Now, let me understand this right. After the U.S. and Israel attacked Iran, everybody got into a truce. The U.S. pulled its ships away, and they tried to negotiate. Why is that different? That was good faith. And now we're here. So if you were to ask me how it's going to end, I predict it's going to end with the U.S. striking in some manner Iran sooner rather than later. I don't know the hour. I don't know the day. But if Iran stays with this position, I don't see that there's any choice but to do that. So it's up to Iran to change the position as I'm reading it. In Japan, Prime Minister Takashi, landslide victory. So a lot of people thought she was going to lose. When she first said, I'm calling snap elections for February 8th, and they said, that could be it. We could be looking at a new prime minister instead. By just the LDP party, she had a majority in the lower house. But with the other coalitions and how the elections went, she's got a super majority. So I would look tonight for the end to be a bit lower, because one of the things she's going to do is start cutting some taxes at home, food especially, and then other parts that she wants to do. For China, they tried to corral her into she's bad, she's not good, and the people got behind her. So for China, this isn't a good outcome. For the U.S., it most certainly is. And we'll just see where that all comes in. As for everything else, well, those are the things that went on. But as you know, we had a big rally in a lot of the markets on Friday. And was that just a reaction in the markets to the big breaks that we'd had during the week? It could be. But for the S&P, you still finished down on the week. Well, let me say for the month so far, 0.19%. When we go to the weekly chart of closes, you were down on the weekly the same way. So let's make sure I've got monthly and weekly. So they're doing the same thing at this point, tracking the same way, because it's the first week of the month, obviously. As we take a look at just the weekly chart of what it looks like, obviously if the market can burst through this area, you could get some more buying. I was reading a Goldman Sachs report over the weekend where they're predicting the market's going to see a ton of selling from algorithm trades and CTA boxes, that when a market drops a certain amount and you get a pullback to the upside like we're getting, they often sell into it. I don't know. We'll see what that comes out. When I look at the swing line, you have a higher high, lower low pattern. So you're not really trending in the market. The market did a very good job again of holding the 18-week moving average of closes. It has stayed above it, giving the market upside bias. And the resistance is around 70.83.5, the upper Bollinger Band. When we look at slow stochastics, they've stayed embedded. So embedded, if you've taken my enhanced Bollinger Band course, teaches you that when you're embedded, traders normally buy the breaks, and until the market loses that reading, they're then looking for the market to go back up, could be the Bollinger Band. When we take a look at the Dow, embedded reading, new all-time high in the futures. So this was the strongest. It didn't quite get to the 18-week average of closes, but it certainly hasn't been able to close under it. And you have to go all the way back here to May of last year to get any time frame when the market did close under that number. That's not the case in the NASDAQ, which closed underneath the band now. So this is a sign of weakness. We hadn't done that till May of last year, and now we've done it one more time. We're traveling between the upper and lower Bollinger Bands, just whipping back and forth right now. And in the Russell, you've stayed over the 18-week average. The bias is good, and the market, well, it's not like the other markets. You can see just recently in November, the market was under the 18-week average. But it's come into its own, and a lot of traders like rolling out of the big name techs and the other big names and into these lower caps right now. In the DAX, here too, you didn't really back off much. You couldn't get under the 18-week average, so the bias is still up there. The 30-year bonds, we're getting a bit of short covering. The market has been oversold. It might be coming into the 18 and the 100-week average of closes, the green and the red. Obviously, I would think you would get a bid in those markets if, and I want to use the words if, the U.S. decides to pull the plug. Netanyahu is coming into the White House, I think it's Tuesday or Wednesday. He's not coming for lunch. You can count on that. And Iran is sort of playing into their hands for this, so we'll see what goes on. In the 10-year notes, you can see our market sitting here, starting to pull itself back up. We will see where the market goes between the 18 and this is the 200-day average, and that seems to be what the market is fighting a battle at. In the dollar index, you have a higher high, a lower low. That's really not doing a heck of a lot one way or the other. And the euro got ahead of itself, got up to and over the Bollinger Band, pulling back into it. Now, if I'm right, and I'm looking on the daily charts, I still think one of the patterns that we're going to get out of the market over time is going to be the dollar down, the euro up. When we take a look at the Canadian dollar, higher lows, higher highs, went up last week to the 200-week average in the Bollinger Band and sold off from there. Not unexpected. Generally, the first challenge of those numbers do things like that. In the Japanese yen on a weekly basis, we finished down. I think the market's going to break from here a bit because I do believe that the financial policies will not be to raise interest rates. Mr. Takashi believes, in my opinion, that a weak yen supports them economically abroad, brings in business, and that's something that she wants to get done. That's my take on it. Doesn't mean I'm right. In Bitcoin, higher high, lower low, running this lower band. You had a pretty good washout. You got down to 60,000, and magically Friday, the market saw a big rally, came back and closed at 70,000. Then we look at the differential between Brent and WTI crude, and you're sitting at $1.07 or so. That's where this market's been sort of pivoting back and forth between the two. The trend is still up, so there's no sign here of that. I believe it's geopolitical tension that is driving the market up, not demand for the products. That's my own take on this, but you don't fight the chart action. Nothing on the chart action at this point is saying go short. Same thing on the WTI crude, but it's also not screaming buy into the Bollinger Band. When you take a look at the Harbor unleaded gasoline coming back down into support against the 18 and the 100-day average, you have a higher high, lower low pattern, really not doing a heck of a lot one way or the other. So you put it all together, you try to come up with game plans, and I'll talk to you about gold in a minute here in my gold update. But remember, you can just click at the top here, go to the offerings on our website at iraepstein.com. You can sign up for the research there, any of the products that we have. You can do so by clicking up here as well. You'll get that icon from YouTube. I'm Ira Epstein. You have yourself a great Super Bowl day, and I'll catch up with everybody Monday morning or in the other videos tonight, and we'll see what the markets bring us. Take care.